the banks, Josh? You like some, not others.
Well, we've been overweight, but we're emphasizing quality. The two big bank-related holdings that we're in right now would be the Berkshire Hathaway B shares. Berkshire, of course, has stakes in Goldman, in GE, in Wells. And then the other one that we picked up recently was JP Morgan. We bought it right before the stress tests. We felt that they would come out, compared to everyone else, with flying colors. Not only did they jacked the dividend up, and they're buying $15 billion worth of stock. This is the one bank that Berkshire Hathaway doesn't own, but Buffett owns it in his personal portfolio. So we really like the name. We hate the company, but it doesn't matter.
Yeah, I want the voice of, I want Lee in here.
This is not an easy place to be.
What do you mean?
This is not, first of all, banks.
I'm up 8 points in 3 weeks.
You take a cat, it doesn't matter if it's alive or if it's dead, you drop it off the Empire State, the thing's going to bounce. All we saw this year is that banks, just like the home builders, you can say the same thing about home builders, they all raced up, okay? Now, granted, I'll give you the JP Morgan is a good bank. I don't, yeah, but you know what they have? They have huge regulatory problems. And this yield curve is not steep. I mean, we've got a 10-year that can't even break 3%. Steepening. I think that, you know what, you're going to have to wait until the core problem is resolved. With banking in this country,
I'll be a seller when that happens.
We've got major problems.
I'll be a seller on that.
You know what, all that's happened this year is that you've had the cat bounce, and I think that you have to look at where you're going to have real exponential earning growth. That's why the NASDAQ has done so well, and people are going to start looking at growth that's not based just on the perception that we're going to get a yield curve that's steepening. It's got to get steep.
Let me throw a long-term bank play out there to Paul. I was told by a senior banking executive at one of the big banks that it's very likely that more reform may be on the way outside of Dodd-Frank, that the banks and their bottom line as a long-term play may get hit even harder. And his belief is that we will see even more stringent reforms on the financials. A, do you think that's possible? B, how does that play in here?
I think it's possible. I mean, it's politically very easy to beat up on the big banks. I mean, when you rank the things that are most hated in the country, you probably have politicians and us lowly media types just below the Wall Street fat cat. So it wouldn't shock me. But to interject on what Josh and Lee have been debating, I think the key for the average investor is just that you have to differentiate. I mean, I agree a lot with what Lee is saying, that I'd be very scared about many big banks. They're still very opaque. We don't know what exactly they have on their balance sheets, and there could be more headaches. But at the same time, there is a big difference between JP Morgan Chase and B of A and Citi. JP Morgan is quality, so there's nothing wrong with trying to find the best in what may still be a sorry group. That doesn't mean if you like JPM, you're going to go and bet the house on B of A as well.
That's
there's
right.
a huge difference.
Why go into a pond of losers just to diversify? Which I think Josh is a fine point. My personal perspective as an investor is I don't want to go find the king of the losers. I'd rather just let the losers hang out on one side of the lunch side.
It's the number one performing sector on the year. You yourself just said that only price pays.
That's going to be too short-lived.
Hang on. This is the
only.
I
want to have price be backed up by. It has been.
Earnings growth and price in the right direction. I'm not sure what else you'd like to see. What I think
because I don't hear Obama coming up and saying that I hate Apple and I think that we really need to reform how they make iPods.
That's a stale thesis. If you look at Dodd-Frank, if you look at the lobbying that's been going on with the banks, this will go on for a very long time.
A third of Dodd-Frank. It will go on, and Dodd-Frank isn't legislation. Dodd-Frank is hundreds and hundreds and hundreds of pages that is not law, but it is recommendations for more bureaucracy.
Many of the laws still have to be written.
Torture yourself. Read the first 300 pages. It will kill you.
I'd prefer not to.
I can't believe Lee didn't read all 2,000 pages.
I'm reading the Hunger Games instead of Dodd-Frank.
Yeah, Paul definitely did.
Might not be the best thing.
Paul,
you got to read it. It's so much fun.
What he does on Saturday night.
You'll be smarter than any senator.
Okay.
That's a low
Paul,
bar.
your final take on this with the banks. Are you in Josh's camp? Are you in Lee's camp?
Well, I think, like I said, I'm in a mix. I really still think that any industry that's highly regulated and could get regulated further has a lot of potential legal risk. So JP Morgan, I'd be happy with that one, but B of A and some of the other low dividend yield ones, very nervous on.
Poppy, you talk about the Bernanke put. How about the Jamie Dimon put? Here's a guy who's going to buy back $15 billion worth of his own stock. I know we get desensitized to big numbers.
It's
a large number.
He says he's going to buy that.
Right.
He will buy back if and when he wants to.
When you see it.
Right. So we don't know exactly when those purchases will take place, but he's authorized to do so, and the dividend was raised. So look, this is not, hey, buy every bank because everything's fine. This is, there are winners and losers like in every industry. Clearly we know who's a winner and who's a loser in this group. I have no interest in the cities of the world because I still think there are some issues there, but I think you can feel comfortable owning a stock in a sector. And look, you see the commercials. They're now launching ETFs that are all dividends, X banks. When a group is that hated, you can't continue with the same old
When a
thesis
group is
and
that
continue to hate
hated,
it.
Josh loves it. That's why we love you. Josh, thank you. Our very own Paula Monica. Follow his Buzz column. Josh, new book, Backstage Wall Street. Check it out. Lee Munson from Portfolio LLC. Thank you all very much. For everyone out there, follow the second quarter with us on CNN Money.